All right. Good morning, traders. How are y'all doing on this fine Saturday, July 26th? It is 8 o'clock Eastern Time. I am coming to you live from my brother's office in his house. We travel over to Jacksonville the last weekend of every month, and he was so kind to set me up three monitors, a webcam, and everything I needed to be with y'all live on Saturdays, the last Saturday of the month. So, thank you to my brother. Good morning, Mike, Cece, Gary, Deepak. Thanks for saying hi in the comments. Y'all hit the like button. I would really appreciate it. Make sure you're subscribed to the channel. All right, I'm going to share my screen. We're going to get started first with the market analysis. Give us an idea of what the market did last week since the last time I joined you last Saturday. We made new all-time highs. I'm looking at an ES weekly chart. I like to start on that weekly chart and then break it down to lower time frames. And that gives me a picture of what areas could act as support on a pullback. Now, everyone's talking about that the market is extended, and I get that. I agree with that analysis. But what I know is price levels on the chart don't lie, and each dip was bought last week. Any pullbacks we had to a bull channel in the markets were buy the dip opportunities. Luckily, in the trendy room and SPX room at Simpler, we knew those zones ahead of time and was able to capitalize on those dips. So for the ES this week, the immediate resistance is the all-time high. We have no supply above because we're at all-time highs. All we can do is put extension targets on the chart to get targets to the upside. As far as demand goes on the weekly chart, we created demand a couple of weeks ago between the levels of 62.74 and 62.23. I do have the 9 EMA marked on this weekly chart at 61.82. So a pullback to that area would be a buy the dip opportunity for me. Now let's look at the daily chart and see what we have on the daily chart. Again, all-time high, immediate resistance. As far as your daily demand zone, that's going to be down at 63.46 by 63.18. You do have the 9 EMA here on the daily chart at 63.64. Now, last week we did get an opportunity to buy the dip on that daily cloud touch, and then the next 3 days up we went. So 63.64 is where the 9 EMA is currently setting on the daily chart. Up next, we have the 4-hour chart. I like to use this time frame chart for trades I'm going to be in for anywhere from 2 to 10 days. Really, it's mainly I trade this for a trade that I'm going to be in for that week. So on the 4-hour chart, we have a nice rounding bottom here, a slight pullback. We rounded out. And then yesterday, we created an up candle. Now, I don't have this zone marked as green, but the zone is 64.07 by 63.91 and a half. A pullback to there on Monday would be a buy the dip on the day trading chart because of this inside and up candle formation. So that 6,400 psychological, nice round number level is going to be important for bulls and bears. Bears would like to get price below 6,400 and become resistance. And of course, bulls would like to defend that area and use it as support for another leg up. We do have major earnings next week, so be aware of those earnings. I personally don't trade earnings, but if you do, you need to know who is reporting. I like to use earning whisperers for my data on who's reporting. They just have a great chart or graphic that shows the major players and when they are reporting. I'll pull up that graphic so that we're all aware of the earnings catalyst. Give me 1 second. I'll bring that over to the screens. So, the earnings catalyst for this coming up week, Monday before the bell, nothing really to see here. If you're in any of these names, it's too late. You're in for the earnings report. After the close, we have waste management reporting. I am interested in that one because I have equity in my long term account. Then you got Tilray. That was super popular a couple of years ago, but not so much now. But they are reporting this week. Then Whirlpool is another name that could be interesting, but I really don't trade it. On Tuesday before the bell, big name United Healthcare, that's United Health Group, but I know it as United Healthcare, is reporting SoFi, PayPal, Boeing, UPS, Spotify, Merck, Procter and Gamble, all big names reporting there on Tuesday morning before the bell. Then after the close, we have Visa, Mara, that is a crypto miner, then Starbucks, Booking, Cheesecake Factory. I love to eat there, but I don't trade it. And then Wednesday morning, you got Kraft Heinz. I will be watching that because I am an equity holder of Kraft Heinz. Generac, all of us from Florida know this company well because we battle hurricanes. But Generac is going to report Wednesday before the bell. Then you have Etsy, Hershey, Humana all reporting. Wednesday, huge day after the close. Last week provided us Google and Tesla earnings. And this week on Wednesday after the close, we have Meta, Microsoft, Robinhood all reporting. Qualcomm is another name that I regularly trade. Ford, I have equity in this. And then ARM. So big day on Wednesday. On Thursday, CVS, Roblox. I spent a lot of money there. My grandkids like to spend money on Roblox. We also have MasterCard reporting before the bell on Thursday. Next big catalyst potential is Thursday after the close with Amazon, MSTR, Coinbase, Reddit, all these names that have been in the buzz ETF, popular on social media. Lots of MSTR and Coin and Reddit traders, also Riot, then Roku. So, biggest days Wednesday after the close and Thursday after the close. And on Friday before the open, we have ExxonMobil, Chevron. I will be paying attention to those. So that's what is reporting earnings next week. As far as planned economic data that is going to be released next week. I do watch this information as well. I don't base my trades, and it won't keep me from taking a trade because we have economic data coming out. But I do want to be aware of when it's coming out. That is important to be aware so that you're not surprised. So let me refresh this and get to next week. And we'll talk about what is reporting or planned reporting. You can always get the random tweet at any time that will drive market price. But on Monday, before the bell at 8:30 Eastern, we have goods trades balance, preliminary wholesale inventories. Then at 9 o'clock, HPI, S&P composite, 10 a.m. on Tuesday, JOLTS job opening. Notice the red folder. That means that it could have a high impact. Then you have consumer confidence, API weekly statistical bulletin after the close at 4:30. On Wednesday, before the bell, non-farm employment change, advanced GDP, big catalyst potential there. 10 a.m. pending home sales month over month, crude oil inventories at 10:30. Then you have 2 p.m. on Wednesday, federal funds rates as well as the FOMC statement from their last meeting. 2:30 FOMC press conference. Lots going on that day. Then on Thursday, before the bell, core PCE, unemployment or employment cost and unemployment claims, personal income and personal spending. At 9:45 a.m. on Thursday, Chicago PMI, natural gas storage at 10:30. Then on Friday, before the bell, average hourly earnings, non-farm employment change, unemployment rate, followed by PMI at 9:45. 10 o'clock, also some PMI numbers, ISM manufacturing prices, consumer revised U of M consumer sentiment, and inflation expectations, as well as construction spending. So big week for economic data being released. As I said, I think it's wise to always know when we have those planned data releases and just trade according to what you're comfortable risk. I will stay in trades through those catalysts because I trade with a risk amount that I am fine with if the unforeseen happened and my position went to zero. So let's go back and look at and talk about the ES levels one more time. Several areas of demand on all time frames below. Somewhere around 6,400 is going to be that immediate buy the dip opportunity. As long as you're all right with the risk. Now let's take a look at the NASDAQ from a top-down approach as well. NASDAQ made new all-time highs this week, finally. 23,476. The demand zone on the weekly chart, 22,860 by 22,582, and the weekly 9 EMA, 22,480. On the daily chart for the NASDAQ, you did create yesterday after an inside candle on the 24th. Friday brought us an up candle. The move was not significant. It wasn't one that I'm going to draw a demand zone around, but I want you to know that 23,391 could be an area of support where buyers would step in. As far as the daily cloud, I'm going to move this level up because it has continued to rise. Again, NQ brought you by the dip opportunities on July 22nd and July 23rd on a dip back to that 9 EMA. So 23,276 is where that 9 EMA is setting on the daily chart. As far as the demand zone goes, 23,232 by 23,017. Now let's look at the 4-hour chart. The 4-hour chart, again, all-time high is your immediate resistance. You have an inside and up candle formation at 23,371 by 23,298. It's not green on my screen, but I will use it as a buy the dip zone on the day trading chart that I share every morning in the trendy room and SPX room before the market opens. All right, the zone that we got an opportunity to buy the dip in on Tuesday, as far as the NASDAQ goes, held up well. We did wick below it. I put the 23,108 level on the day trading charts and said, as long as we continue making higher highs than this low that was created on the week on Tuesday, then the path of least resistance is to the upside. And that proved to be the case. We came down, we made a low on Wednesday, but it was a higher low, came right back into that demand zone with a trendy turn signal and a nice imbalance candle out of there on Wednesday, proved to be buy the dip opportunity. All right. I don't want to leave the Dow out because I'm very proud of the Dow this week. The Dow finally, after months and months and months, made a new all-time high. That high was created back here at the end of January, and the Dow had been kind of lagging behind, not creating new all-time highs until this week. You do have a nice rounding bottom here on the weekly chart on the Dow. So I have that low marked, as well as the 9 EMA has caught up to that mark on the Dow. So 43,973 is an important level for this week. Bulls want to keep price above there, and bears would love to drive price below. Please note, if the bears drive price below and we close below this level this week on the Dow, that would have created a supply zone up here. Let's look at the daily chart on the Dow. Yesterday was an inside day. Thursday was an inside day. But on Wednesday, with the day that we created the new all-time high, we got a buy arrow right at this 4-hour cloud. Buyers stepped in, creating the inside and up candle formation. And now for 2 days, Thursday and Friday, we just consolidated up here near all-time highs. That is your immediate resistance for this week. As far as a buy zone, 44,746 to 43,973. On the 4-hour chart, this was the buy the dip zone that I gave ahead of when last week, at the beginning of last week. We actually got an opportunity here on Tuesday at that zone, and you can see that price went up, making new all-time highs on Wednesday. So great buy off of that buy the dip zone down there on the 4-hour chart. We consolidated, then we had a pullback that could have scared some traders, but it just pulled back to the 4-hour cloud where we consolidated. Hopefully for bulls, this is a rounding bottom, and we can go back up to test all-time highs and potentially make a new all-time high. So that is an overall perspective of the three major indexes that I watch. Now I want to talk about how I am going to choose names for my swing trade watch list next week. Number one, I first consider the overall trend in the market, and that trend is bullish. That means for my swing trade watch list, it remains looking for names that are bullish, outperformers, and that when they pull back to a buy zone, I want to be buying the dip and playing price back up to the upside. I do not swing trade against the trend unless I am planning on being in the trade for a year to multiple years and treat it as a leap trade, buying at a high time frame demand zone and then holding on to it for again at least a year. All right, so that's when I will trade against a trend, is for leap trades, but I'm buying in high time frame demand and prepared to stay in the trade for at least a year. All right. So, as far as my look on the market and where the relative strength is from a 3 month look back to a monthly and then to just 5 days, which would have been all of last week, these are the things that I wrote down in my notes. Number one, we're in a bullish trend across all three major indexes. So my bias is to buy the dip in demand and play for potential continuation to the upside. There was a little bit of change in strength last week. On a 3 month look back, XLI, the industrial sector, actually made the top five for the first time in a while. So I am going to put some industrial names on my watch list for this week. They've earned the right to be there. They are showing relative strength from a 3 month look back as well as a monthly look back. XME continues to make the top five on all of those time frame look backs that I monitor. So XME, I've got some charts we're going to look at on in the uh, metals and mining sector. Then semiconductors remain strong. They are leading really the market to the upside, and especially the NASDAQ to the upside. So I have some uh, semiconductor stocks that I will be watching this week for potential pullback buys. After that, I have OIH, oil services. They are showing some relative strength looking back over 30 days and last week. So I want to take a look at three names in that sector to potentially find a buy the dip opportunity there. And then, of course, I always like to have some social sentiment names on my watch list. So I've picked three that don't have earnings next week that we will take a look at. So let's start in the semiconductor sector. The names that I like to chart for potential buy the dip opportunities, I'm going to focus on the daily chart for the most part, and I'm going to talk about NVIDIA first. NVIDIA made a new all-time high really on yesterday on Friday, and that all-time high is 17472. We created an inside candle here on the 23rd of July, and then we gapped up the next day. I have this level of 170.78 marked because I've got cloud support, the 9 EMA, in that general vicinity. So if I get an alert at this level, it doesn't mean I'm just going to jump in, because you can see the move up hasn't been astronomical or anything like that. No big imbalance candles or anything. It's really just these choppy looking candles. But I do want to know when price gets to that 170.78, because I could at least take a shorter term type of swing trade, possibly for next week, just trading from this zone up back up to the all-time high. All right. So that was 170.78. You can see this wick low where buyers stepped in and price stayed above there, 170.130. It's also the bottom of the 4-hour cloud. So somewhere between 170.130 and 170.78, I would use that as more of a day trading off of a 2-hour chart and use the PMC to trade NVIDIA next week, or wait for a pullback to 169.13 where we have this imbalance candle. We also have inside and up candle structure, and use this zone 169.13. See the lower weekly edge? I'm going to adjust that level to include that lower weekly edge. So 169.13 to 165.64 is the main zone where I'm going to create an alert at or below, and I'm going to write a note to myself of what this is. Because when that alert goes off, TOS will show me that note, and it tells me to go to the 4-hour chart and look for the trade plan. All right. So let's map this out. Number one, the risk is approximately $3.50 right here. As far as reward goes, the upper weekly edge by the all-time high is my reward. So I want that to be an absolute minimum of a 1-to-1 risk to reward. If the pullback is only to the top of this zone, 169, and it trades up to the upper weekly edge by the all-time high, that's going to give me a reward of approximately $4.50 to $5.50. So it is better than a 1-for-1 risk to reward on this trade. So that is my zone to set a trade up for NVIDIA. Next semiconductor stock that I want to look at is AMD. Again, I'm going to go to that daily chart first. AMD is right at a supply zone. Okay, this is important. This is why I wait for the dip. I'm not just going to buy AMD up here when I know that I have resistance directly above. I need a pullback. So I'm going to go to, if I were to wait for price to pull back to this inside gap up zone down here at 146.42 by 141.60, that's a great buy the dip zone. But if I want to trade it next week for a swing trade, I'm going to come down here to the 4-hour chart, and I'm going to look for the inside and up candle formation. The zone that I have marked is 156.5 by 149.34. I also have inside and up candle formation here at 159.79. Again, here at 162.24. So an earlier zone that I could play to buy the dip this week, because I have made demand higher than where it was last week, would be 162.24 by 158.36. So let's talk about on AMD where our targets would be, because that's important, right? Here it is. So if I buy the dip in this zone 162.24 to 158.36, my very first target is going to be this upper weekly edge at 165.13. Then my next target would be 167.17, and finally 171 by 175. Now, let's consider the risk to reward, because that's a big factor in how I narrow down a list of 4 semiconductor names down to 1 or 2 that I'm going to focus on watching. All right, we know NVIDIA's risk to reward to first target was better than 1 for 1, but not 2 for 1. Let's look at NVIDIA's 162.24 to 158.36 is my buy zone. That is $4 approximately of risk. The reward is $3. So AMD does not have as good risk to reward as what NVIDIA does. So I'm going to write on my scratch pad NVIDIA, because so far it's the one that gives me the best risk to reward. Then I'm going to take a look at the next name that I like to watch in the semiconductors, which is Taiwan Semis. I'm going to go to a daily chart, start there. Wow, nice rounding bottom on this daily chart. Look at that. That's beautiful. A little pullback here at resistance. Yeah, maybe. Where would the buy the dip come in on the daily chart? Well, the earliest support is the 9 EMA here at 239.21. I have a lower weekly edge that's lining up with the daily 21, and that is all lining up to this kind of gap area that we gapped from July 14th to July 15th. So I like that. Now, where would I put my stop on this? Well, this candle wick low here. All right. So an early entry, more like day trading for me, would come at 239.21. But where I'm really interested in buying the dip is going to be 234.46 by 231.76. I am wrong on this trade if price drops below that wick low from that gap up. So that's going to give me my total risk on the trade. And then we're going to calculate what the potential reward is and see if this is providing a better or worse risk to reward. All right, I'm going to remove this line because that would be more for day trading. So my risk on this trade is approximately $3, a little less. Okay, $2.30 to be exact. My reward is this upper weekly edge. So I'm going to move this. That is the first area of resistance on Taiwan semis. So the risk to reward here is much better than NVIDIA, and definitely much better than AMD. So I need to put Taiwan semis so far at the top of my list. All right. And then the last one that I'm watching in the semiconductor space is Broadcom. Broadcom's all-time high is up here at 295.39. That was a spike on a 4-hour chart. On the daily, it's not going to show that because it happened after hours. So 295.39. Here is the upper weekly edge, which if I buy the dip on Broadcom, that is the reward, because that would be trading it from lower weekly edge to upper weekly edge. So the zone, the demand zone on Broadcom, was created on an inside and up here, and inside candle gap up there. So 275.60 by 262.66 is $13 of risk, and the reward is 15. Not as good as Taiwan semis, about the same as Nvidia. So the star of the show for me is Taiwan Semiconductors. And if you're in the trendy room, you will see that exact trade plan in the notes section under Melissa's trade notes, where I give the exact trading plan for Taiwan semis this week. Next, I want to take a look at the metals and mining, because I'm already in Hecla mining, but that trade has a break even stop. I have profited nicely off of the trade so far. So I have nothing, no more of my capital, realized capital, is actually at risk on that trade with a break even stop. For that reason, I'm interested in watching a couple of names this week that if I get a buy the dip opportunity, I would start a trade in them. It would not cause me to be overly allocated in the sector, because the name that I've been trading the last couple of weeks has given me nice realized profits, and I have a break even stop. So the first name up that I want to look at is CLF, Cleveland Cliffs. All right. And I chose not to already have my drawings on here. And I want to show you how I would create those zones, just in case you're new to the channel or you're not a member of the trendy room. This will give you an idea of how I create my buy and sell zones. I look at where price is currently at. To get my buy zone, I want to look down and I want to look to the left, and I want to find the inside and up candle structure. Now, when we have a gap up like we did on Cleveland Cliffs, you can choose to use the body of the candle, of the gap candle, as the top of your zone, and then the bottom of the zone is the low. All right, so on CLF, that would give me a buy the dip zone of $10.09 by $8.69. So I'm going to draw my green box there, because that would be my zone to buy the dip. And you can see inside of this zone, there's some important moving averages in here, the 200 and the 21, as well as all of the EMAs of the trendy cloud, which are the 9 on this cloud is a 9, 13, 22, and 44. So with all of that EMA support inside of this zone, plus the inside and up candle formation and my trendy edges, I like this zone for a buy the dip on CLF. The immediate resistance is going to be right here where it chopped. All right. In order to find my sell zone or my supply zone, I need to look up and left to find the inside candlestick structure, followed by the down candle. All right. So I got a couple of areas here. You can tell where price peaked and then went down. But I'm not going to mark this zone, because that down word action was actually related to the zone back here. All right, you have an inside and down candle structure. Then right here, you have inside and down candle structure. So I'm going to use and combine both of these zones for a target zone to the upside on Cleveland Cliffs. Okay, so that's going to give me two more targets above the $11.72, which is the upper weekly edge for this week. I like to color these zones red. All right, so now let's look at a little risk to reward and final target reward. Okay, so on the risk, $1.40. On the reward, $1.53 for the first target. Then above there, you're looking at anywhere from $2 to $4. So nice risk to reward if we break above this upper weekly edge. But it is better than a 1-for-1 on risk to reward to that first conservative target. So I'm going to mark CLF because it fits my criteria for a trade according to risk to reward. All right. Now let's look at the other name that I could potentially look to trade out of the metals and mining, and that is CMC. All right. So on the daily chart on CMC, I had an alert to buy it at 49.50 because I had a trade plan in this name already, but it never made it down there. So now that we have created a higher demand zone, I'm going to mark this new zone as my buy the dip opportunity on CMC. That's 51.28 to 50.38. That is approximately a dollar. I know it's only 90 cents, but we're going to call it a dollar risk right here. So that's my buy zone on CMC. Now, the immediate resistance, again, is that upper weekly edge for this week. I can already tell that risk to reward is going to be good on this name. Then above there, above 54.17, my next target is the yearly edge mid at $56. And my ultimate target is up here at 59.79 by 64.53. I can already tell that this is a better risk to reward than CLF. So CMC is going to get a star as the star of the show in that sector and the names that I'm watching. Now, there's other names I could trade, but they didn't make my list because maybe they were not in a bullish trend. Maybe they were below key moving averages. Or maybe they had earnings coming up next week, which I don't want to mess with for a swing trade. So those are the two I am going to watch this week, but CMC gets the star. Now let's talk about the industrial sector and some names I would be looking to buy the dip on. We will start with GE. Now, if you don't go all the way back to, I believe the year was 2000, this is the weekly supply zone that was created in the Y2K year, a long time ago. All right, price has gotten back up into this supply zone. 288.35 is the next level inside of this supply zone, and then the all-time high is 301.42. So 288.35, 301.42. I need to be aware that GE is in supply on the weekly chart from back 25 years ago, but it's still supply until we get a candle close above the all-time high. You have supply here. All right, let's look at the daily chart now. As far as the daily chart supply zone, we're right at the top. This is a beautiful rounding bottom that would indicate a good dip buy if we can get it this week. Now, I already know, right, that GE is in that supply zone from 25 years ago. So I'm going to take off that red box because I'm aware that it is in a very old supply zone. I'm going to leave the top of that supply on here, and then I'm going to scroll down and I'm going to use those levels off of that weekly chart to create my target zone to the upside. That is 288 by 301. That's going to be my target zone for GE on a potential trade if I get a buy the dip. So 288, 301. And they don't have to be exact, guys. We're not creating the cure for cancer that has to be exact. I'm just getting that zone from the weekly chart and using it as a upside target on GE. All right. So that's what we got as far as a target, but price has to get above 274.33 for that to even matter. Now, looking at my chart, taking into consideration EMAs, here's my trendy cloud, taking into consideration trendy edges representing playing fields of supply and demand, and taking into account candle structure, I'm going to set a buy zone. The bottom would be if we take out this low, which is 254.66. I got double edge support in here. Then I'm going to use this level here as a top of the zone because I have my daily EMA cloud right here, the 9 EMA at 263. And then I have my edge support, the daily 21, this bottoming wick as the bottom of the zone. I'm going to create a green box, and that's going to be my buy zone. It has a risk of about $8.50. My first reward is going to be about $11. And then that ultimate reward up there at 288 would be a very nice reward because it is $22 above my zone. Okay. So that's what I'm looking at for GE. It has a good enough risk to reward to make my list. And again, if it's the star of the show for industrials, it will make my note in the trending room. Now, up next for industrials, I want to take a look at RTX. We had a trade in RTX, just ran out of time on the trade. It did well, but I need a new potential zone for RTX. We created new all-time highs. We're getting a buy arrow, etc., etc. Those are all good things when I'm picking outperforming stocks in outperforming sectors. Okay. So I like the chart and it is bullish, very bullish. I'm not buying it here. I will not buy at all-time highs to go long. I'm not a momentum or a breakout trader, so to speak. But if you are, that's your immediate resistance, and that would be where you could go long. I'm going to look, though, down here at the daily, sorry, At the daily, one second. All right, that helped. At the daily 21, where I have a double stack of edges, I have this swing low here. You see the area that I'm going to look to buy the dip? It's from this candle structure, and that dip down back into that zone, and then off we went. So that's going to give me a risk of about $3, two and a half, $3 on RTX here. And as far as the reward goes, that upper weekly edge by the all time high would be my target. So, and hey, if we make new all time highs and we're in a runner position, great. I do want to mark the bottom here of this imbalance candle because this was inside and this was technically an up candle, just not a big enough move. But if I get some pullback on RTX next week, I would start the position here at the bottom of what would be that zone 149.11 that's lining up with the 21-day moving average, and starting the position here and adding to full allocation with confirmation in this zone. A stop would be a candle close below 143.56, and my target area would be 155.69 by the all-time high. So from a risk to reward perspective, I got about $5.50 of risk, and to this first target, that's going to be 6.50 to $8 of reward. So good enough risk to reward there. And of course, we could make new all time highs and then we would have even better reward. But it's not like blow your socks off, good risk to reward. So let's keep looking. Up next, ETN. Eaton. Boy, it's been a long time since I charted this one. Wow. All right, let's take a look at Eaton and see what is going on. Well, looks like we made a new high. No idea if that's all-time high because I haven't traded this in so very long. Yep. Okay. Just making sure before I quote that. All-time high. All right. Buy the dip. See this inside gap up? This would be the area. All right. You got some trendy edges in between there that I could use to potentially add at if I was not fully allocated inside of this zone. So I need about an $18 pullback in Eaton. Okay. Now this one, I can already tell up to that upper weekly edge is going to be about, let's see, our risk is $19 and our initial reward would be about $14. So this one isn't going to make my risk to reward. And I need to trade this entire zone because of that inside and gap up and nice rounding bottom. So yeah, I would trade this entire zone and the risk to reward just isn't there. So GE or RTX will be the one on my focus list for this week. All right, next up, I want to take a look at the OIH sector and some names that are not reporting earnings that are in bullish trends and that I would be interested in trading on a pullback. So, wow, look at that thing go. Baker Hughes, BKR. Very, very, very nice price action. Notice I have some fibs drawn on here. I'm going to just check and see if they, yeah, pretty much. All right. So on a name like this that's had a big run, but it's coming up into supply, I would be expecting a pullback. It's very bullish across all time frames. Here's the zones that I use based on Fibonacci to buy dips. This gives me a low risk because the zones are typically pretty narrow. So that's about what? $1 risk. Let's just say it's $1 risk. The next zone would be between the 50 and the 618. So either the bull channel or the golden pocket, buy in the dip. Again, very low risk, less than $1 there, or wait for demand. Okay, I do have a lower weekly edge right here. So I'm going to go ahead and move that buy zone at the very bottom up to $40.21. So the most aggressive zone to buy the dip, of course, would be the top zone, the bull channel. But it offers a small risk to reward, or small risk if I choose to trade from that zone. Now, price pulls back to here. This is my target. All right, that would be $1 risk, and the reward would be $2. If I choose to use this zone, then my initial target is going to be this upper weekly edge because we're showing weakness inside of the edges at that point, and that's when I would use that upper weekly edge. So from this zone, the risk is again approximately $1, and the reward would be $2. Not bad, 2 for 1. If I wait, or if I trade all three of these zones and maybe get stopped out here and stopped out here, then I trade this zone. That is going to be a risk of about $2.50. And my initial reward would be this upper yearly edge because price would be below it at this point. And that would be a $3 reward to first target. Then I would use the upper weekly edge as my next target and target this supply zone. So any of these zones are tradable for me. I just have to be okay with the risk to reward. So I will go ahead and put BKR on as a potential trade from the OIH sector. Next up, the next name I want to look at is FTI. All right. This zone is, for me, very, very obvious. Number one, I got my trendy edges that line up so beautifully with this inside and up candle formation. It's a risk of $1 again. It's a buy the dip zone. Okay. It's at a lower weekly edge. It's at this inside and up, followed by a gap up. I like the zone, but it would require some weakness in FTI to get down here. And there are key EMA levels along the way. They are here and here. All right. So it could be on a pullback that price only comes back to 34.63 or 33.27. So for that reason, I could go down to a smaller time frame and find the 4-hour zone in here to trade this zone, or I can increase the width or the risk of this zone and choose this level 33.27 to be my first buy the dip area. All right. Either way, it's just being more aggressive with my entry here on a 4-hour chart, or adding a little risk. It would be adding a risk of about 57 cents. Not that big of a deal to me. Let's check if adding that 57 cents, which would now make the risk about $1.50, if I added that risk of and or use the risk of $1.50, then I'm going to, because price would be back here, this trendy edge would be my first target. And that would be approximately $1.90, $2 above my first entry. So $1.50 risk, about $2 for my first reward, and then the next trim level would be here. Target level would be here. So not bad, not the greatest, but it's worth at least noting. Halliburton has been absolutely rocked Halliburton's been rocked this year, but it's trying to show some strength. Okay. It is in an extremely bearish trend for the year, but it's trying to show some strength here. And I want to look at this on a weekly chart and talk about a potential leap type trade in Halliburton. That would be buying this zone 2068 by 1872. My first target 2306, and then 2489 and 2673. This is a risk of about $2. This is a reward of about $2.50, and then this reward would be $4 to $6. All right, it would be a longer term trade. So I would need to go to my option chain here and say that I wanted to trade this off a weekly chart, so I could use 6 months, or December would be 5 months. I'm looking for liquidity here, right? So what strike would I be buying? The $20 call. So is there liquidity on the $20 call? Not really. I could go out of the money by $1, and there's plenty of liquidity there, or increase the amount of time I'm in the trade. Look at the January $20 calls, and we have not bad. It actually had some volume on Friday. But that's not bad going out to January. So Halliburton would be not necessarily a swing trade that I typically talk about on these videos. It would be a longer term swing trade, choosing the January 2026 $20 calls. All right. So I will include that chart this week for a potential longer term trade. Now, last but not least is some social sentiment type names. These might have short flow. They might just be popular on the social media sites like Reddit, Twitter, Discord, things like that. But Rocket Lab, we've had good trades in Rocket Lab. I still like the chart. It is still in a bullish trend. A pullback here to the buy zone of 39.30 by 32.41. With an add here at 36.23. This is a zone I would like to buy again on Rocket Lab. Now the risk is about $7 there, and the reward would be about 11 to $14. So, not a bad risk to reward. This is the zone I'm interested in buying the dip on Rocket Lab next week if we get some weakness. All right. An initial starter at the top and then add to the position at 36.23 with confirmation of higher lows inside and breakout candles or trendy turn signals or monster reversal arrows. All right. That would be a trade plan for Rocket Lab. Up next, I want to look at ASTS, another name that we traded. I can't remember if it was the beginning of this month or in June when we traded it, but another nice trade. All right. On ASTS, I would use a 4-hour chart for this trade. And my buy zone is going to be here at 52.50 by 49.27. That is a risk of $3.25 approximately. And my reward is up here, which would be about a $6.50 reward. This is the chart that I would use to trade ASTS, and more than likely that will make my list of potential buzz type name trades. Now, note that when trading these types of names, you need to be nimble, you need to be quick, you need to take your profits when the price hits your targets. I trade these very disciplined. In other words, if we get below 49.27 with a 4-hour candle close, that's a stop. I'm not going to hold on to it with hopium unless I'm in a lotto type trade, and I have $100 or $200 at risk. But that's not typically how I trade. So just know that on ASTS. And then next, I want to look at BBAI, which again, social sentiment type of name that we have traded and did well on. And it's kind of pulling back to a key level of $7.30 that we were watching to see if it would hold as support. All right. So this is the zone for me to trade on BBAI. It has a risk of about 50 cents. All right. 50 cents of risk. The initial target's about 50 cents. That's a 1-for-1. But I'm really looking for BBAI to get back up here to this target zone and see if it can't finally break through this wall and get up here where I have these alerts from that previous trade. But this is really my target on BBAI. But I have to mark this one because you had an inside and down candle formation and the upper weekly edges here. All right, so that would be my buy zone on BBAI. Because the zone has been tested, I would scale into the trade, getting my feet wet or getting my feet in the door here at 732, go in half allocation. But then if price comes down to 709, looking at a 2-hour or a 1-hour chart, for confirmation signals before adding to full allocation. Stop would be a candle close on the daily below $6.83. All right. All right. So that is my extensive look at potential swing trades. I'm going to go back and look at the chat because I've been so focused on the charts. I've missed y'all's hellos and all of that. So, Mike, I believe I told you good morning. Andy, thanks for watching. Ivan, good morning. John, good morning. And Paul, good morning. It's so great to have y'all join me. David C., good morning, my friend. I hope y'all really had a great trading week last week. I know in the trendy room and the SPX room at Simpler, we had a really good week. My alerted trades were all winners. I called the market beautifully. ES and NQ futures. And I'm not saying that out of arrogance or ego, guys. I'm just saying that the process that we trade works very, very well. And the buy zones, waiting for confirmation in those, and then taking the trades, it worked every day. Either ES made it to my buy zone or NQ made it to my buy zone, coaching traders through how to trade that buy zone. Very, very, very nice trades last week. All right, guys. Let me see. Deepak, what was the reason to mark 63.91.5 on the ES 4-hour chart? Let me check, Deepak. 60. What do you say? It's a bottom. Look, Deepak. See the rounding bottom? It's that bottoming wick of that nice rounding bottom. The low that was created there. All right. All right, guys, I'm going to wrap this up. I can hear my grandkids stirring around here at my brother's house, and I need to get them some breakfast and get them squared away because the men are at Bible study today. And so it is just my sister and I, or sister-in-law, Amy. She's a member of the Trendy Room. We're the only ones here, and she might still be asleep. So I'm going to go down and take care of them. But I hope you have a fabulous weekend. Enjoy your time away from the charts. And if you're a member of the Trendy Room or SPX Room, I will see you Monday morning, bright and early. Y'all have a great weekend. Until next time, much love.